Hey traders, this is Blake Morrow with Trader Summit, and I have Mr. Richard Matthews from One.io. Good to see you, Richard.
Good evening. How you doing?
It's great. Forget it's evening over there. I'm doing great. We have a lot to talk about today, and specifically, I know you wanted to talk about inflation, but before we do that, I know you wanted to mention this, so I'm going to mention it really quick. Crude's breaking out. I mean, crude is rallying, and technically, the bull flag pattern that we're seeing in the markets look like it point to the mid 90s, but you think it's going higher than that, and ask or tell me how that is and why.
Before I start, the only thing I'll say to stop me thinking it's really going to burst upwards is Goldman Sachs saying it's going to break 100. If Goldman Sachs is going to say it's going to break 100, they're long. They're looking to sell it, but that's just an old cynic. I think Saudi and Russia have got together, and it suits them both to squeeze the market.
Yep.
I don't think Biden's actually filled up the reserve properly. Winter's coming, I think there's lots and lots of reasons for it to push higher, all of which actually are bad for Germany.
And so, with this move higher in crude, and I think people, this is a topic of conversation I've had in recent weeks, not only with our community, but with other people that I've been interviewing. Crude oil is at that inflection point where, a lot of times you'll see crude move up and stocks will move up, crude will move down, stocks will move down. But right now, the crude's not moving because of demand. Crude is moving because of cuts and in supply. And as a result, prices are going to go higher, and that's really going to affect the economy in a negative way. So as crude moves up, I think that stocks are going to feel some downside pressure and risk in general, because it's going to make the jobs of the ECB, which is next week, and the Fed moving forward, and every other central bank, really difficult.
Yeah, it's really interesting, isn't it? Because actually, you can control supply a lot easier than you can demand with oil. Yeah, the Saudis and the Russians get together. We're going to squeeze it. They can squeeze it. Winter's coming, so. And that's interesting about stocks, because I'm not the greatest bull on stocks. What puzzles me is why the VIX is at the level it's at. It just is ridiculous. I think there's so many risks out there at the moment, not just in oil, but in inflation, right the way across the board. And yet VIX just sits there doing nothing.
Well, we could definitely blame it on summer, the summer doldrums, but summer is almost officially over for a lot of people. I know there in the UK, you have a lot of parents that their kids actually go to school and start school next week. So yeah, I mean, things should start ripping and roaring, and maybe the volatility is going to be an issue. Hey, I know you were mentioning before we hit record, you were also talking about the Panama Canal and problems you're seeing there. Can you elaborate and tell us, as viewers, what's on your mind?
Well, I turned into a weather forecast. I should be trading ags, not financials. Apparently, the water level's too low to put anything through the Panama Canal. I read that this morning. No one's talking about it. Is that going to affect supply elsewhere and start getting problems with supply chains again? And the economy in the US looks okay. Up until probably today, I didn't think the Fed was going to hike rates. I actually now think they will. And I'm going to really put my head on the line here. I think the ECB will as well, and the Bank of England. So I think you're going to see 325s this month.
Well, that's going to be interesting for price action, because obviously we're getting the ECB next week, just as we're getting a read on inflation in the US. So there should be a lot of volatility in the coming days. Wouldn't you agree?
Well, I hope so. I hope when people get back, finish dropping their kids off at school. I mean, Labor Day's been and gone, and everyone should be back trading now. Everything in America looks good. And I just wonder, I read an article over the weekend by Helen Thomas from Blonde Money, who was saying that actually maybe we shouldn't watch inflation so much now. We want to watch employment, because we're in a whole new economy. And we've talked about this before, that since COVID and with the war, that we're in an environment none of us have ever seen before, and whether employment is just as important as inflation. And really, I don't see the Fed worrying until the unemployment rate in the States gets above 4% and maybe into 4.5%. I don't think they're really, really going to panic. And even then, mark my words, the people who reckon they're going to be cuts in the first half of next year are bonkers.
Well, then here we go. We're gonna make that as a bold statement here on the Trader Summit. Now, I wanted to ask you really quick, as far as the events that are coming up over the next few weeks, which ones are the ones that are most important to you? That could produce the most volatility, I would say.
Oh, I think the Fed.
Yeah.
I think the Fed always is the most important. And actually, this time around, I think all three central bank meetings are pretty hard to call. The Bank of England always is because they're, stir crazy. You've got the ECB next week. I think it's 50-50 on whether they hike. Germany's in a real mess. The Uber hawks don't actually have a vote on the council at the moment. But I think that Lagarde, having said that actions speak louder than words, will back it up and she'll hike. But the Fed is always the one, and that's everyone hopes that they're going to pause and they're going to come out and say, hey, we're pausing, we're not moving rates any higher, and they're going to drop next year. I'm sure that's what equities have been thinking for bloody months now, and they are bonkers.
Well, let me ask you this then, based on your predictions, and where you're gonna lay it down on the line, where are you going to be trading, and how are you going to trade it? Are you still a dollar bull? The dollar, and by the way, you've been a dollar bull. The dollar's breaking out. The pullbacks have been very minor. Are you still expecting the dollar to shine on the exceptionalism theory, or?
Yeah, I do actually. I mean, we're touching 6-month highs, aren't we? We're knocking around on the DAX, way up there. I still think there's a little bit to run in the dollar, and the whole world's calling get short of the dollar, and I just think they're wrong. And usually for me, I'd always want to be short of sterling, long of dollars, but I also want to be short of the euro. I can't see much reason to buy either of those currencies at the moment. If you look what's going on in China with the slowdown over there, that really affects Europe. The currency will drop, cars will be cheaper to buy, affects Germany, luxury goods will suffer, which affects France. I'm not just saying that France only produces luxury goods. I can't think of much else they do. They produce a very nice cheese and nice holiday resorts, but primarily they produce luxury goods. And Italy as well. And I think that really the China slowdown will hit Europe, combined with the squeeze on oil. Sounds like stagflation to me.
Well, stagflation it is, and if you're going to continue to buy the dollar, well, let me ask you this about the sterling. You've been kind of on the fence recently, but the sterling has been not doing so well. Do you think that we eventually break below this 125 in a meaningful way and start trading back towards 120, or do you think that we'll see 130 before 120? What are your thoughts there?
I don't think you'll see 130. I think you might see 127 again. I'd still want to run short of it. I love this country, and although I'm only half English, I'm very, very proud to be an Englishman. And I'm sitting here very close to the first restaurant my dad took me to in the city, who'd be haunting me for saying this. But this country's really got problems. One of our largest county councils has been announced as bankrupt. We had the Secretary of State for Education. Our schools are crumbling, literally. They've been built with concrete, which is falling to pieces after 40 years. And you get the Secretary of State for Education on TV using the F word, and you just say, is this a government that really says anything great about this country? And you're facing an election next year, and not that America's much better, the choice is there, but I think that we've got some inherent problems here, and I'm not sure the world's aware of them. I'm not sure the world's taking them seriously as yet.
Well, Richard, I want to say it's always great to hear from you and to have this weekly discussion with you. What's the best way for traders to follow your work?
You can follow me on Twitter at Dickie Matthews, and also I'm starting to post some stuff on the one.io, LinkedIn, and we're hitting social media more and more. So there's going to be more coming out.
Great. Well, we'll be looking for your work, and we published it consistently over here on the Trader Summit as well. So if you like what Richard had to say today, make sure you give him a big thumbs up, subscribe to the channel down below so you don't miss any of this exclusive content that you only are going to get here. Richard, I want to thank you. Good luck this next week, and we'll look forward to catching up to you with you next week.
Yeah, and I think we've got hopefully have Michael Brown on so we can have a proper preview of the central banks next week.
Michael Brown with Pepperstone would be great, or with Trader X, excuse me, will be great to have here as well.
Love it. Have a good week, Blake. Cheers now.
You do the same. Cheers.
Bye. Bye.
Hey traders, Blake Morrow here. Thanks for stopping by our YouTube channel. Don't forget to like, share, and subscribe to our channel. Also click the bell notifications so you do not miss any of our market-related trading analysis from some of the leading industry experts. Thanks for stopping by. We'll see you in the next video.